Hello, this is Riya and you're watching the News Point. In a significant update on India's economic outlook, Union Finance Minister Nirmala Sitharaman has expressed strong confidence in the resilience of the Indian economy, even as global trade tensions rise. Her remarks come amid the United States imposing a 50% tariff on certain Indian imports, a move that has raised concerns across key sectors. Today, we take a closer look at what this means for India's growth, trade and strategic economic planning. Recently, the US government announced a 50% tariff on several Indian goods, impacting major industries including textile, steel, and electronics. Such measures could potentially disrupt India's export-driven sectors and challenge overall economic stability. Analysts had warned that this could affect India's trade balance and investor sentiment. However, the finance minister highlighted that India's economy is well positioned to absorb such shocks due to its robust domestic demand and diversified economic structure. Speaking at a recent event, Sitharaman emphasized that India's reliance on domestic consumption and international markets serve as a critical buffer against external pressures. Unlike some economies heavily dependent on exports, India has built a model that leverages strong internal demand, strategic infrastructure development, and a growing middle class. This ensures that even in the face of trade restrictions abroad, economic activity within the country continues at a healthy pace. To mitigate the impact of US tariffs, the government is actively exploring alternative export markets and strengthening trade ties with other nations. This includes engaging with countries across Asia, Africa, and Europe to diversify export destinations, reducing dependency on any single market. Additionally, targeted policies and reforms are being introduced to support affected industries, encourage domestic manufacturing, and maintain investor confidence. Despite global headwinds, the finance minister reaffirmed the government's ambitious target of 8% GDP growth for the current fiscal year. According to her, this target is not merely aspirational. It is backed by policy reforms, strategic infrastructure projects, and initiatives to boost domestic investment and consumption. Sitharaman also underscored that achieving this level of growth is crucial for India's long-term vision of becoming a Viksit Bharat or developed India by 2047. In conclusion, while international trade tensions and tariff measures pose challenges, India's economic fundamentals remain strong. The government's proactive approach, combined with a resilient domestic economy, positions the nation to navigate these uncertainties and continue its trajectory as one of the world's fastest-growing major economies. As global dynamics evolve, all eyes will remain on how India balances external pressures with internal growth and how policy measures translate into sustained economic performance. This was your economic update. Stay with us for more insights on India's growth story and global trade developments. Thank you for watching.